Welcome to Traders Consigliere Weekly Analysis. So before the start of the week, we look at the fundamentals and technicals for the upcoming week to figure out potential trades that we can take. So we look at fundamentals first, we look at the previous week to see if any biases have changed, then we look at the upcoming week. So from the previous week, on Monday, we had Empire State Manufacturing Index, which came in a bit higher, which made dollar bullish, right? Because these numbers need to come in negative, right, or less than the previous month. But it came in positive, which gave the dollar its bullish move. Core retail sales and retail sales came out at 0.2, much below forecast, which shows the rate hikes are working, and that's a good sign for the Federal Reserve. On Wednesday, we had British Pound CPI, Consumer Price Index, and surprisingly, it has dropped to 7.9%. Right, so if you compare it for the forecast and the previous month, that is a big difference at 7.9%, and that's why we had a weakness with the British pound, which the reason why was Bank of England would possibly hike rates less aggressively, right? Because we did see a big drop in the inflation data. Retail price index, something that I like to look at, it's at 10.7%, still eye-watering high. Lower than the forecast in the previous month, still somewhat of a good sign. We see unemployment claims also. This had some volatility last week, coming in lower, which is not a good thing if you think about it. This needs to come in higher. If the rate hikes are working, the consumers should be feeling pain. So this came in lower. That gave the dollar its bullish retracement on the DXY, which we'll look in a minute. Philly, which is the Philadelphia Manufacturing Index, came in at a negative 13.5, a bit higher than the previous month, but lower than the forecast. So not a big difference. This didn't have much volatility. Existing home sales had some volatility, not a big difference. So we have national core CPI for the Japanese yen, pretty much stagnant. Nothing big. And British pound retail sales came in at 0.7%, showing that if you look at the forecast and then you see this number here, that shows that the inflation is still raging, right? This number was supposed to come in at the forecast level or lower, right, if the rate hikes are working, but this came in the green and much higher. So that still shows the inflation is persisting in UK. So this current week, we have a lot of fundamentals this week. That's why we had a lower volatility last week. So this week, we have a lot of red folders. Shows you the high impact news. With British pound, we had Flash Manufacturing Purchasing Managers Index, right? These numbers are also going to give us some volatility. Same thing with the dollar. We have Bank of Japan Core CPI, which is projected to come a bit lower. We have consumer confidence as well, which is coming in higher, which is interesting. And the main one, on Wednesday, we have FOMC meeting, and FOMC is projected to hike rates by 25 basis points, right? So much less. They have paused the rates for the last two meetings, and on this meeting, they are projected to hike rates by 25 basis points, right? So if Fed do hike aggressively at 50 basis point, that will make dollar bullish, or if they take another pause, that will make dollar bearish, right? But if they do hike by 25 basis point as forecasted, I think that's already been priced in the market, so that won't show us heavy volatility. But the main thing to keep an eye on is the press conference, and to keep an eye on Jerome Powell, the chairman of the Federal Reserve, and see what comments he makes about the future rate hikes and his outlook. That's going to be the main thing that a lot of traders are going to keep an eye on, right? So very important. Very important news, right? So on Thursday, we have GDP as well for the dollar, and this is coming in a bit lower, which is expected. If you're hiking rates, the economy is going to contract. It's going to go into a bit of a recession, right? It's going to recede. So this is interesting. I think this is the first estimate, I believe. So, this is the first one, advanced GDP. We have the preliminary and the final. we do see a lot of volatility with the advanced GDP, and the reason why is it's usually the first estimate, right? And this shows maybe the forecast on what can happen in the final GDP. But keep an eye on this, very important as well. Probably a lot of commodities can get shaken up with the GDP number. Core durable goods also very important. And on Friday we have Bank of Japan, and from my expectations I expect them to hold the rates at the negative interest rates, right? A negative 0.1, and that is still going to make the Japanese yen even more bearish, right? Therefore this pairs such as British pound, Japanese yen, we should see British pound being much stronger than the yen. But by any shock or if the Japanese yen, the Bank of Japan do increase the interest rates, that is going to shock the market completely, right? So something to keep an eye on, but I don't expect them to take an aggressive sentiment. They're going to keep it at the same rate it's been. The press conference comments made by the Bank of Japan's governor will be important. Keep an eye on that. And then on core PCE price index on Friday as well. Important number, something Federal Chairman Powell for the dollar. He keeps mentioning core PCE price index has been quite stubborn, and number to keep an eye on as well. And we have University of Michigan consumer sentiment. So let's look at the technicals now. Let's start with the dollar index. Just like mentioned last week, with the dollar index, we got the retracement, right? And I do expect maybe a possibly higher retracement, right? Maybe all the way towards this zone here where we had this breakout, and then maybe a reversal. Or if price does decide to close here and then give us a reversal, also possible, because this area of support, right, resistance has been held as support a lot of times in the past. So that's what I expect with the dollar. I expect with the dollar maybe a move towards this zone till the Federal Reserve meeting, and then a drop once the meeting happens. So with British pound dollar, knowing that the dollar is bearish and the British pound still inflation is persisting, we remain bullish with the sentiment here, right? So on the weekly we have a bullish structure, and we notice it has hit our our supply zone on the weekly. On the daily, we notice once it hit our zone, we had a reversal that happened, right? But as we are bullish on this pair, we are looking to take longs, and those will be the highest probability. Notice how price has been coming down, and we see momentum lose out in the last candle here with the indecision candle. On the 4 hour, also same thing with a bearish structure. So what I want to see is if price can come towards the zone here at 1.26500, and let me also mark it off, maybe 1.26500, somewhere around here. And I want to see how price reacts off here. If price gives me a nice reaction, possibly I may take a long position, right? So obviously join the free Telegram group to keep updated on this trade. Let's look at British pound, Japanese yen. Let's start with the weekly bullish, and just like I mentioned again, on the supply zone we have had that slowdown, right? We also capitalized on the slowdown on this zone in the group, but we noticed it slowed down, and now we're seeing somewhat of a retracement with the last candle there, a bullish engulfing. What I think is price possibly will give us a retest at this demand zone, maybe, right? Which is, by the way, an the counter trend trade, and it is a lower probability. So I would caution using higher risk here, right? With especially all the data that's coming out. This is probably at the 182.9 area there. And I like this. I like all the liquidity that has been built up all around here. I like how we had a liquidity sweep, a lot of liquidity been taken out, right? A lot of liquidity been taken out, and I think possibly a counter trend trade can occur from point here to maybe taking a short position there, and having a take profit somewhere down here at this demand zone here, right, around here, for probably a 1 to 8, right, risk reward, a nice decent risk reward. Possibly even here we can keep it to be a bit safer. We can keep it here around here for about 1 to 7, right? around that 180.6 region, 180.7 region would be my take profit. So something I'll keep an eye on, but this will be a lower probability, right? Because price can do something like not react off here and then take out all these sellers and then go above, right? Because we see a lot of liquidity also being built up here. So this will be a lower probability, therefore risk low percentage if you're going to take this. Let's look at gold. Gold on the weekly time frame, quite choppy, I would say. I don't like the structure here. On the daily as well, choppy, a bullish move, right? A bullish move, but I don't like all the structure and the choppiness here. Possibly we can see gold retrace towards this demand zone here, and if we see certain reactions we can take a short position, but just knowing that the dollar is bearish, I am not comfortable taking short position. So I want to see structure on the weekly be a bit more clear, maybe breaking through this zone here, or even in fact breaking through the zone above, right? Which would be cautious because it's going to enter the high gold highs, right? All-time highs. So that's what I'm looking with gold at the moment. I just want to see what happens around here, but I don't think I see any clear trade or high probability areas. Let's look at SPX now, S&P 500. On the weekly, we see bullish momentum, right? And I believe price will travel all the way up here to your daily demand zone, supply zone at 4,700, right? 4,700. And what I am waiting, we see bullish, bullish, right? We're bullish with the SPX. So we see price being bullish. Therefore, I want to wait to see if this weekly demand zone gets retested, and I want to see how price reacts of this zone, right? And then if I say a nice structure shift, probably I'll be taking a long position. So again, join the free Telegram to stay updated. This would be at 4450, believe around there, right? So I want to see how price reacts off here. Let's look at NASDAQ. NASDAQ has pretty much a similar structure. We look at the weekly time frame. Price has rejected our area of supply, and we capitalized on this move last week. On the daily time frame, we see price has given us a nice retracement, a rejection of the daily zone, and now I expect price to come over to this weekly zone, just like SPX, the same thing. And I want to see how price reacts of this zone, which is around the 15 to 50 range, right? So no trades here. I want to wait and see how price reacts, and if price gives me a structure change and a good confluence, then I'll be taking this trade. So I want to see price do something like come in here, somewhere around here, then break up, right? So that's why I'm waiting for NAS100. US30 finally, after weeks of consolidation, has finally given us a break, trending move, right? So we have now seen a break above after pretty much all around this region from November of last year, right? But it's been quite a while. It's been in a consolidation range, and finally we have gotten the break. We have seen somewhat of a reverse head and shoulder as well, right? And we see a break above. So if you go down to a daily time frame, we see it has hit a area of demand, a supply on the 4 hour, right? I remember this is the 4 hour zone, and it's hit the zone, and now we see price reacting off that zone. And once I saw price reacting of the zone, I see a slowdown in momentum, right? And knowing that price has slowed down here, I see a price has created a consolidation area here, and possibly if price can now give us a break below this area here, this lows around this area here, can come up there and then go towards our supply zone, possibly there may be a counter trend trade that you can capitalize on, which is again, I would say counter trend trades are risky, risk very low percentage because price can take you out. So this would be around the 35-300 range, right around here. So possibly we can capitalize off that by taking a short position there, stop loss above, take profit all the way towards this demand zone, or maybe even safer here, right? Pretty much for a 1 to 9 risk reward. So that's what I'm looking at with US30. But taking longs is the higher probability, and if price does reach towards our area down here on the 1 hour time frame, a demand zone, and I like how this demand zone specifically on the how we had a reaction, heavy momentum, a lot of demand, right? So this area here is somewhere I would be looking to take buy positions from, and this would be at 34,600. Not even 34,600, I would say 34,620, let's call it, right? Let's round that number. And this would be a higher probability than the position above. So that's what I'm looking at with US30, and this is what I'm looking for this week, to be updated with the other trades and other pairs, and if I'm going to take this trade, and to stay updated if any of the structure changes happen, join the free Telegram. And until next time, like and subscribe.